In the United States, it's the worst sell-off we've seen in 8 months. And worldwide, if we look at the global index, the FTSE, it's the largest drop we've seen. It went the lowest we've seen since April. So what is your perspective on why stocks are selling off right now, and where are they headed?
Well, first of all, Elijah, 8 months is not very much in the big scheme of things. Even April, which is 6 months, is not so much in the big scheme of things. So I know we're all very worried when the market goes down 6 or 7%, but even 6 or 7% is meaningless in the big scheme of things. Now, having said that, it may be the end. This may be the end is finally here. You know, it's been 10 years since we had a serious bear market in the United States. That's the longest in recorded history. So we may be ready. This may be the beginning of a big bear market. The way bear markets work, Elijah, as you well know, is they start where nobody's looking. In 2007, Iceland went bankrupt. Well, nobody cared or knew or even knew there was an Iceland. And then Ireland went bankrupt. And then Northern Rock went bankrupt. And Bear Stearns went bankrupt. And by then, some people started to say, well, wait a minute, something's going on. And by the time Lehman Brothers went bankrupt, everybody knew. It was in the front page of the papers and the evening news. And we all knew a year and a half or so later that there was a serious bear market in the works. That's the way things work. Now, we have had things like that happening in the last year or so. Turkey, Venezuela, Argentina, Indonesia, Indian banks, Latvia. You know, they're things that nobody cares about or pays attention to, and they're all very, very small. But it may be the snowball, may be gathering speed, and this may be it. I don't know. Should watch your show and find out.
Hey, Jim, I noticed a lot of people talking about the parity trade between bonds and stocks has kind of changed a little bit. I guess in the last 2 decades or so, or even longer, with interest rates, constantly going down, it seems. It looks like they kind of worked in parity as far as, one asset class would go up when the other would go down. But I know you traded a lot in the 70s and 80s when that wasn't the case, right? When the parity didn't work. Are you noticing a little bit of a change?
Well, of course, interest rates in the United States, the bear market, or depending on how you look at it, interest bonds made their low in 1981 and went up for the next 35 years or so. You pick whichever year you want to say was the bottom or the top, depending on how you look at it. A previous bull market in bonds, by the way, in the United States lasted 35 years also. There's no magic to that number, I don't think, but it may be coincidental. So anyway, bonds have been going up a long, long time. Nearly everybody in the market only knows interest rates going down. That's going to change. It is changing. It's going to change. Interest rates are going to go much, much higher, not just in the U.S., but all over the world. This has never happened in recorded history, what we've seen. Interest rates in some countries became negative. Many countries became negative. This has never, ever happened. The American Central Bank, followed by other central banks, started off with an experiment. They had no idea what they were doing. They will sometimes acknowledge in private that this is an experiment. Well, it's a horrible, horrible mistake. We're all going to pay a terrible price for this horrible mistake because interest rates went to very, very artificial levels, never before in history, and now they're going to go back up again. Somebody's going to pay a lot of money. I hope I'm not one of them. I hope nobody watching this show is involved. But no, it's going to be disastrous for many people.
Hey, Jim, just to follow up on that, I mean, they never seem to let the markets clear and do their work. I mean, do you expect them to intervene again at some point in the downturn?
Of course they are. Are you kidding? These guys are bureaucrats and academics. They don't know what they're doing. And right. Mr. Trump, of course, is going to shriek to the high heavens about how horrible this is. No, when things get really bad, everybody's going to call up and say, you've got to save us. You've got to save Western civilization. It's not Western civilization. It's me. Save me is what they mean. Yeah. But so the central bank is going to do something. Cut interest rates, buy assets, who knows what they will do. And the market will have a rally. The market will certainly rally because people will say, they've come and they're saving us again. But after that rally, boy, that's when the real horrible part of the bear market is going to come. So be worried. Be worried.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
Now, one of the things kind of on the stock market, about the stock market, is that if we look at the U.S., if you look at the total cap of the stock market, it's about 140% of GDP. Now, normally it's around 60%. So some people have argued that it seems to be overvalued by more than 2 times. What is your perspective on that? And if we see this kind of crash that you're talking about, could it fall more than 50%?
It always falls more than 50% in bear markets. That's what bear markets are. I laugh, but I've seen several, and I've read about many more. Bear markets are not fun. A lot of people get wiped out and destroyed. Bear markets come along and clean out excesses. It's like a forest fire. Forest fires are horrible if you're there, but in the end, the forest fire cleans out the dead wood, the underbrush, and the forest can grow with renewed vigor and strength afterwards. Well, that's what bear markets do. That's what recessions do. That's one of the beauty, shall I say, of capitalism. I don't want to be misunderstood in that. I'm just saying that that's how the world is supposed to work, and it always has worked. So yes, the next one's going to be the worst in my lifetime, and I think I'm older than both of you guys, maybe older than both of you put together.
Now, you talked about how, when it comes time to move out of the dollar into other currencies or gold, you hope you're smart enough to do that. Like, what is your perspective on, like, for the average person who's wanting to do that as well, what are some of the signposts you might be looking out for?
Well, I think I know the dollar is going to get overvalued. That will be pretty clear. You just go back and look at historic charts, and you look at things like purchasing power. When an ice cream in New York is expensive compared to Paris, very expensive, then you say, well, maybe something's going on. These are fairly simple, standard things that have happened throughout history. To turn into a bubble, bubbles look the same too, no matter what the asset and no matter what the country and no matter when. If it turns into a bubble, you'll know as well as I do. Well, most people deny it's a bubble. But people will be screaming to buy U.S. dollars. Kids will be leaving college to become currency traders. Everybody will know that the only safe thing in the world is the U.S. dollar. And then I'll sell. And then it'll go higher. I promise you I'll sell too soon. I always do. The signs of all bubbles and all overvalued markets are the same. The key is, of course, timing, which I'm terrible at. I have to ask you guys when to sell. But just watch for symptoms of overvaluation. You mentioned before a symptom of the U.S. stock market, which may mean it's overvalued. There are symptoms, historic symptoms in every market, which we can look at to say, hey, it's certainly expensive. That does not mean it cannot get more expensive, I assure you. Bubbles are really, really insane. But those are all symptoms which every market and anybody who's any student of any market should start to recognize those symptoms.
Hey, Jim, one final question from me. I know commodities right now are about as cheap as they've ever been relative to other asset classes. I've looked personally at various investments in farming and stuff like that, especially in South and Central America. It looks like there's some interesting opportunities in emerging markets. Are there any commodities right now that you're really key on, that you're seeing, that you think, maybe in the next few years or something you might want to play on?
Well, I will tell you that agriculture is cheap. I would have told you last year, too, that agriculture is cheap. But like many bear markets, things get cheaper, just like in bull markets. Things get overvalued, and then they get more overvalued. That's the way markets work. But certainly agriculture, sugar is very, very cheap on a historic basis. If you want to buy precious metals, silver is cheaper than gold. You can look at the 4 precious metals and see which one is cheapest. Maybe palladium right now. There's some of the precious metals. So look at the ratios and you'll figure out which one if you want to buy. But I would say agriculture, maybe sugar. Just get them all out and look at them and say, You know, I don't know if you know this because you may not be old enough, but sugar is down over 80% from its all-time high.
Wow.
I mean, there's not much in the world that's down over 80% from its all-time high.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.